Hi guys, so as we all know, for many years successive governments have desperately tried to make the New Zealand economy into nothing but a FIRE economy. FIRE stands for finance, insurance and real estate. Fortunately, there are still farmers doing the actual heavy lifting and a bit of tourism, but that's gone off the boil lately, which is quite surprising with the New Zealand dollar so weak, I have to say. It's a bit sad really that this has been allowed to happen. But when you got governments all with vested interest in the real estate part of the economy going up in price, this is where you end up. Now this chart shows the New Zealand official cash rate over the years. And that thing moving along the line is a headless chicken. But I have had to include the head as I don't want YouTube giving this video an R18 rating. The RBNZ sets these rates depending on a whole raft of reasons. And they tell us that their main goal is to keep stable inflation within a target of 1% and 3%. But we all know that the cost of houses is their main target, and this was proven during COVID. If you have listened to any New Zealand mainstream media paid for by the real estate industry lately, you'll be starting to think that the New Zealand housing Ponzi scheme is about to take off again. Obviously, once again, the RBNZ is playing its part by cutting interest rates so people with term deposits due to roll over soon see the much lower interest rates and decide it's no longer worth reinvesting in term deposits, so they might as well move towards buying an investment property again. They can now start making all of their money from renting to some poor unfortunate young kiwi who is only trapped in renting due to crazy house prices. But there's one thing that could really derail this rinse and repeat plan of the government and the RBNZs, and that is the rise in global bond yields. As you can see here, the US bond yields are going up, the Japanese bond yields are going up, and the UK's bond yields are going up, and many other countries are also going up. So rising global bond yields tend to increase the cost of borrowing in New Zealand. This is because global bond yields, particularly the US's, significantly influence New Zealand swap rates, and New Zealand swap rates are a benchmark for setting New Zealand's fixed mortgage rates. So higher swap rates means higher cost of borrowing, which can obviously affect economic activity and growth, but it can also affect New Zealand house prices. At present, New Zealand swap rates seem to have not had any serious jumps and seem quite stable. I put a link in the description of where you can find the 1 to 10 year New Zealand swap rate charts. But then there's this from the RBNZ's latest survey of expectations. The link is in the description. This is a reminder of the lingering upside risk of inflation. So it is clear that there is still enormous risk out there in the New Zealand economy. So what does happen if New Zealand swap rates, and as a result New Zealand mortgage rates, stop dropping or even, heaven forbid, start to rise again? What happens if the housing market, which is already overloaded with an enormous number of listings for sale and an enormous number of rentals, doesn't take off like a rocket again? What happens if Labour get in and they try and stop the two main charities for landlords, which are the tax offsets and the accommodation supplements? Can landlords really survive without this taxpayer charity? In 2019, house prices were dropping, and it was only COVID's money printing and interest rate cuts to save the New Zealand property market from a substantial drop. So it pays to be cautious, guys, that's for sure. For all we know, the RBNZ might go insane again and remove the LVRs and cut interest rates to near zero. We all know how far they will go to save the Ponzi, as they've done it before. But if they do that again, say goodbye to the New Zealand dollar and hello to the New Zimbabwean Pacific peso. And hello to insane imported inflation. So do your own research, guys, before listening to any vested interest media property spruiker who obviously loves a backhander from the real estate lobby. I've heard a lot of call-ins lately on a large talkback show with obviously set up crystal clear calls from a studio trying to spruik the property market. They are desperate to create FOMO again. And they have no shame and no morals, still a lot of them. So guys, thanks for watching, and keep an eye on global bond yields, and I will see you on the next one. Cheers.